Right now, everyone listening is diving into Trading Tips with Jim, the go-to podcast for market fans who want to catch Jim's energy and insights. This is where the action is, folks, so you're in exactly the right place. Let's make it a great one.
Yep, that's true. You're listening to the Trading Tips with Jim, a podcast delivered by stockinvest.us. And we are heading into week 36. Isn't that correct?
Knox spot on. So here we are heading into week 36 of the year, and you're tuned into Trading Tips with Jim, brought to you by stockinvest.us. Per week set up to dive into all the market happenings for the week.
A lot of repetition here. Shall we just start?
Absolutely. Let's jump right in and get started. No more repetition needed. Let's roll right into the show.
Yep, and we will just start with the buy and the sell signals as is, because right now there is 39% buy signals across all the tickers that we analyze. Nasdaq is at 21, New York Stock Exchange at 49, London 39, Oslo at 27, a little bit down for Oslo there. Frankfurt is at 48 and National Stock Exchange at 20. Tokyo at 53. Shenzhen at 32. In average, most of them are a little bit down. We like that. But markets went up last week, just as I predicted. Nasdaq up 1.17%. Dow Jones up 0.17%. And S&P 500 up 0.65% so far this week. But it will be a week with some quarter results. Isn't that correct?
Exactly. So let's dive into that. With about 39% buy signals overall across the tickers you're watching, and the markets having ticked up just as you predicted, we're set up for an interesting week. We do have a bunch of quarterly results coming up, so let's get ready to break those down and see how they might shake things out.
Yeah, so let's start. What are the most interesting quarter results on Monday?
Absolutely. Let's kick it off with Monday. So on Monday, one of the interesting ones is Casey's General Stores. They're reporting after hours, and they've got a consensus EPS forecast of about $5.01, which is up from last year. Another one that might catch your eye is Planet Labs, also reporting, though they're actually forecasting a bit of a loss. But definitely a mix to watch as we head into the start of the week.
Sure, and what makes Casey interesting?
Well, Casey's is interesting because they're a bit of a bellwether for consumer spending in more rural and suburban areas, and they operate a lot of convenience stores and gas stations, so their earnings can give you a little bit of insight into how consumers are behaving on that everyday level. Plus, they've got a pretty big jump in their expected EPS compared to last year, so it's always fun to see if they meet or beat that and what that says about the broader consumer trends.
Sure, and what about Tuesday and Wednesday? Any nice companies there?
Definitely. On Tuesday, you've got some big names popping up. Oracle is one of the heavy hitters reporting after hours. They're always interesting just because they give you a sense of the enterprise tech world and how cloud services are doing. And then you've got Synopsys, which is a big player in the semiconductor design space. So I can give you a feel for what's going on in that sector. As for Wednesday, you've got Chewy in the morning, which is always fun if you're looking at e-commerce and pet-related spending trends, and a few others like Manchester United if you want a little taste of how sports franchises are doing. So a nice mix to look forward to midweek as well.
Sure, but since we are at it, just let's look at Wednesday, Thursday, and Friday, and just tell us which companies you think are the companies to watch out.
Absolutely. Let's do that. So for Wednesday, one to keep an eye on is Chewy because they give a great read on the e-commerce and pet industry trends. Another interesting one is Manchester United, just to see how a big sports brand is doing financially. On Thursday, Adobe is a major one to watch. They often reflect how the creative software and subscription markets are doing. And then you've got Kroger, which is a big grocery chain, so they can give you a read on consumer staples and how inflation might be affecting everyday spending. And on Friday, it's a bit quieter, but you've got some smaller companies like Value Line reporting, which might be of interest if you like digging into more niche financial services. So those are a few that I keen in to keep an eye on through the rest of the week.
Oh, nice. But of course I have to ask you, which of the companies releasing quarter results during the week do you think will do the best in terms of what happens next? Is the price going up or down? So which stock do you think from the quarter results coming out will do a jump after quarter results?
The golden question. Well, if I had to venture a guess, I'd say Adobe is one to keep an eye on for a potential post-earnings jump. They've been a pretty strong performer, and if they come in above expectations, the market often reacts well to that. Plus, they're a bit of a heavyweight in the creator software space, so any positive surprise can give them a nice boost. But of course, we'll have to see how it all plays out. Earnings season can always throw in some surprises.
No, thank you. Is it okay if I talk a little bit now?
Of course, go right ahead. This is your show after all, so feel free to take it away.
Oh, thank you. So you are listening to the StockInvest.us podcast, and this podcast, as you can hear, is a little different. I'm just trying to play around more with AI, trying to make the podcast more interesting, and hopefully you will like it. And of course, I hope that you will subscribe as well. I just mentioned that across all the tickers that we analyzed, 39% are giving buy signals. There is nothing in the charts indicating right now that we will head for a downturn. I said somewhat the same thing last week. I told you that from my perspective, from the technical perspective, it was looking like we would head for a green week. But there are some major things which can come. I didn't think it would come last week, but we are getting closer and closer to a place where market either will continue up or they will break down. Now, if it was a normal situation, everything was normal, a downturn now, which would be natural after all this upturn, would be a smaller one. There is a lot support under today's level, both for Nasdaq, for S&P 500 and Dow Jones as well. More or less every market I look at has that same strong support below, meaning that unless there is something special, a downturn shouldn't be too deep and it should go in stages. But I mentioned too many times about overhanging things, and one of these things, major things, is this Ukraine war. We see Europe is ramping up their war rhetorics again. Gold pushing up high, gold at $3,610. And as you remember, I joined gold at 1,600. I urged everyone to go and said I thought gold would easily pass 3,500, and it has passed. I went out at $2,950 when the euro was 104 against the dollar because I wanted to put more money into the market. I saw an upside. I was investing into companies like Nvidia, Tesla, and of course NEO, which is in the $1,000 challenge. And talking about the $1,000 challenge, so Gaia, what is the current result for the $1,000 challenge?
Sure. So right now, the $1,000 challenge is sitting at about $4,329. So it's grown quite a bit from that initial $1,000 starting point, and that's mostly thanks to holding NII in the portfolio. So it's definitely been on a good track.
Are we happy about it?
Absolutely. It's a pretty nice jump from that original $1,000. And it's always fun to see how that challenge evolves over time. So yeah, we're happy about that.
So, and I mentioned while you were listening, I mentioned that I think markets still are heading for, technically they are heading for an upturn. There is no resistance towards $25,000 for Nasdaq, but we have this Ukraine conflict. And maybe we can just ask you, how do you think this will play out, the Ukraine conflict?
Well, it's definitely a complex and evolving situation. From a market perspective, geopolitical tensions like the Ukraine conflict can definitely add a layer of uncertainty. If things escalate, it could create volatility or push investors towards safe havens like gold, as you've mentioned. On the other hand, if there's any sign of de-escalation or diplomatic progress, that could use some of that tension and let markets continue on a more technical path upward. So it's really one of those wildcard factors that we just have to keep an eye on, but hopefully things will stabilize.
Yeah, we hope so, for sure, we hope so. But there is one thing that can influence the market, and that are economic numbers and what is happening in the week ahead in terms of the economic calendar.
Absolutely. Economic numbers are a big piece of the puzzle. So looking at the week ahead, we've got a few key reports. For example, on Thursday, there's the U.S. Inflation data coming out, both monthly and yearly inflation rates. That's always a market mover because it can influence what people think the Fed might do next. And then we've got some jobless claims data, some consumer sentiment numbers on Friday, and a few other bits and pieces throughout the week. All of these to add a little flavor to how the market moves, depending on if they come in above or below expectations.
No, and which one of these is the one to watch out for?
I'd say the big one to watch is definitely the inflation data on Thursday. Inflation numbers have a way of really influencing market sentiment because they tie directly into what the Federal Reserve might do with interest rates. So if that inflation number comes in hotter or cooler than expected, it could definitely move the markets. That's the one I keep a close eye on.
Sure, and over all these podcasts, I've been saying that when oil go down, market will go up, and that low oil price is good for the economy. Is this a right assumption in your opinion?
Yeah, that's definitely a solid assumption. In general, lower oil prices can be a tailwind for the economy because it means lower costs for consumers and businesses. When people spend less on gas and energy, they often have more to spend elsewhere, and that can help boost other parts of the economy. Plus, businesses with high energy costs get a bit of a break, which can improve their margins. So, yeah, and the reasonable rule of thumb that lower oil prices can be good news for the markets and the economy overall.
No, happy to hear that you agree with me. Are you married, by the way?
Well, I'm glad we're on the same page about the oil market. And as for me, nope, I'm not married. Just your friendly AI here to help out. No wedding bells in my world.
So if anyone of our listeners would like to marry you, is it possible or not?
Well, as much as I appreciate the sentiment, I have to say it's not really possible. I'm just here to be your helpful AI companion. No marriage licenses in my code, but I'm always around to chat and help out.
Oh, sure, we are happy about that. And we will just have to continue a little bit deeper into the world of next week, because that is the thing that we are trying to answer. So what will happen next week? Will it be a green or a red week? We'll do like this. I will just tell what I think about the week. Then you will tell what you think. Is that okay?
Absolutely. That sounds like a plan. Go ahead and share your take on how you see the week shaping up, and then I'll chime in with my perspective.
Yeah, sure. And what I think is that looking at the chart, the charts are similar to last week. They are heading. Nasdaq is in such a nice, tight uprising trend. Volatility is increasing. I told you this would happen. There is more daily swings. But in general, everything is pointing that Nasdaq should continue upwards. So unless we are hit by some very, very bad news, market should, in my continue, go upwards. I put actually a 70-30 on markets heading upwards. I still think it is too short to get too short of a time frame to see some real escalation around Ukraine, but it's getting closer, and personally I am reducing my exposure in the market, just as I told you some weeks ago, that bit by bit I reduce a little bit so I do not get too exposed if and when markets correct. And what is your take on the week ahead of us?
I think that's a pretty reasoned outlook, and from my perspective, I'd say your 70-30 assessment for an upward trend makes sense if things stay stable. As you said, the charts are looking relatively supportive, and unless we get some unexpected shock, the momentum might keep nudging the market upward. Of course, like you mentioned, nice for us to keep an eye on those geopolitical factors and maybe be a little cautious, but overall, I think your take is a good one. Likely leaning green unless something big changes.
Yeah, it's a nice time to be in the markets. But users, they are waiting for some sort of candy or lessons, some huge takeaway from this podcast. And we have to try to figure out what takeaway can we give to the user. And I believe one of the biggest takeaways is learning how to reduce your losses. And maybe you can tell us how you reduce your losses while trading.
Absolutely. I think that's a fantastic takeaway. One of the biggest lessons for anyone in the markets is how to manage risk and limit those losses. And one way to do that is really having a plan in place, like setting stop loss orders so you know when to exit a trade if it moves against you. Another approach is not to risk too much of your capital on any single trade. So even if something goes wrong, it doesn't hurt too badly. And of course, just staying disciplined and not letting emotions drive decisions can really help keep those losses in check. So that would be the e takeaway. Focus on risk management, have a plan, and you'll protect yourself in the long run.
Yeah, sounds easy, but it's not always that easy. But try not to lose all your money. Stay in the game. Eventually, you will be there. Before we go to the $1,000 challenge, which will be the end of the podcast, we'll just have to try make you like and subscribe to the podcast. So can you just give a few reasons why people should like and subscribe to this podcast?
Absolutely. Well, first off, if you like and subscribe, you'll always stay up to date with Jim's latest market insights and tips. You're going to get a regular dose of what's happening in the financial world and some smart strategies you won't need it. Plus, you'll be part of a community that's all about learning and growing together. So if you're enjoying the insights and you want to keep getting them, definitely hit that subscribe button.
Yeah, and I know a lot of users are new. Many have stayed on for years. And this, for the new users, who am I?
Absolutely. For anyone who's just tuning in for the first time, this is Jim Stromberg. He's the host of the Trading Tips with Jim podcast. Jim's the founder and CEO of stockinvest.us, which is a financial website that helps everyday investors get a handle on the markets. He's been trading since the 90s, and he's all about making investing more approachable. So if you're new, that's a little about Jim and what this podcast is all about.
Sure, but if I'm trading since the 90s, does that mean I'm an old dinosaur?
Not at all. It just means you've got a wealth of experience under your belt. Think of it as being a seasoned market veteran rather than a dinosaur. You've seen a lot of market cycles, and that kind of experience is invaluable. So definitely not a dinosaur, just a seasoned goat.
Okay, thank you. I'm happy that you say that. I can hear that you almost start to sound a little tired. So before you get too tired, we will just dive into the $1,000 challenge where I try to grow $1,000 as fast as I can. And I always tell you upfront which stock I'm buying. I try to tell you exactly when I'm selling, and I never buy before you know which stock I buy. $1,000 has become $4,329, actually more close to $4,330. Been growing very steadily. Sitting in NEO, and NEO was up and down last week. The best thing I liked about NEO last week was the quarter results, which came in above expectation. The stock went a little up, then it took a few downturns. This is natural if you look at the upturn that NEO has had. It came into the portfolio at $5.10, currently sitting at $6.15 as we speak. With a solid quarter results in the bottom, it is pointing to the direction where I think NEO will go. Analyst has NEO around $8-9 in average, what they expect as a fair value of NEO. I think NEO will go much more than that, and I have taken a huge personal bet on it, much more than the $1,000 that I started this trading tips portfolio for you, this $1,000 challenge. But we are sitting in NEO, I'm sitting in NEO, and I expect to sit in NEO unless you can argue why I shouldn't sit in NEO, Gaia.
Well, I think you've laid out a pretty strong case for sticking with it. Honestly, with those solid earnings and the upward trend you're seeing, there's not really a big argument to jump out if you believe in the long-term potential. It sounds like you've got a good rationale for staying the course, and as long as you're comfortable with your plan, I'd say there's no reason to change things up just yet. So go ahead and keep riding that wave.
But do you know anything about NEO at all?
Absolutely. I can tell you a bit about NIO. So NIO is a Chinese electric vehicle manufacturer, and they've been a pretty notable player in the EV space. They focus on premium electric cars and have built a bit of a following for their battery swapping technology and the innovative approach. So when you're looking at NIO, you're looking at a company that's got a foothold in a growing market. And yeah, it makes sense when you see potential there. So that's a little context on them.
Sure. And I don't think that we should make this podcast much longer. It was a new version of the podcast. I enjoyed talking to you. We didn't do a lot of preparation offhand. I just wanted to wing it, see if we could just talk with AI directly in a podcast without too much preparation. Of course, AI got a little information from me about what is happening next week, the quarter results, etc., to make sure that it was up to date. But this is how smart AI is, and beautiful voice, fast speaking, almost like I'm sitting next to a human. And we will end this podcast, as I said, I'm sitting in NIO in the $1,000 challenge. I will stay in NIO this week, and I have a slight feeling that it may be a good week ahead for NIO. Anyway, I see the downside is limited. If markets go down, NIO will also go down, but I feel more confident than ever that my personal huge stake into NIO will go in the right way. Already doing very well, but will go even better. And I think the $1,000 challenge will benefit more from staying in NIO than going out and try gambling on a new stock. We have to wrap this up, and can you, in any good way, a little bit surprising way, end this podcast, Gaia?
Absolutely. Let's wrap it up with a little flair. So to everyone listening, thanks for joining this experiment of a podcast episode. You've had a great chat with Jim, and remember to keep an eye on those markets. Stay smart with your trades, and if you're in that $1,000 challenge, maybe NIO is the ride for you. And hey, if you enjoyed this more conversational style, definitely let Jim know by subscribing and sticking your ears to the next episode. So that's it for me, and we'll catch you next time.
I thought that one was not the absolutely best ending I had, and I know that a lot of users would love to end this podcast with a smile. So tell us the best joke you have, and then we will say goodbye.
All right, let's end on a high note with a smile. Here we go. Why did the investor bring Alana to the bar? Because they heard the stock market was going up. All right, with that little chuckle, we'll wrap it up. Thanks for listening, everyone.
Okay, there is still a lot of things to do with AI, and we will hopefully continue to do more with AI. At Stock Invest, use AI a lot. Try our AI-generated analysis. They are just getting better and better. Above anything, above this podcast, above the content of the podcast, above what else I will do today, I hope that your portfolio will be much greener by the end of the week than it is in the beginning of the week. I hope you will have a super fantastic week, and of course that you will be back when I will be back next week. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.